all of these swings in the market. Checking futures right now, we're expecting a pretty strong opening for today's trading. Dow Industrials right now up 112 points, a 0.5% higher after a wild day yesterday when the Dow slid to session lows, down better than 500 points after British Prime Minister Theresa May announced a delay of the exit vote, Britain leaving the European Union. But look at that chart. Markets reversing course as the session wore on. And as you can see, after the lows hit at about 11:15 a.m. in the morning, things slowly but surely came back, only to end higher. When we were down at 11:15, better than 500 points, market was briefly in correction territory, down 20% from the high, that means. Joining us right now, EventShares CIO Ben Phillips. And Ben, it's good to have you on the program this morning.
Thanks for having me, Maria.
What a market. How are you dealing with all this volatility?
Well, we've done some things in the portfolio. We raised cash, actually, on the Fed pop. I guess that was a couple of Wednesdays ago. So we had a big day up. Markets were up about 2%. We actually raised cash to 17% in the portfolio.
Oh, wow.
Yeah, so it was a meaningful move. You know, I think the thought was get a little more defensive. We were pretty skeptical on anything positive coming out of G20, and so after we actually saw that over the weekend, we started to even get a little more defensive.
But longer term, has anything changed in terms of structural, performance for this market? Look at the backdrop in terms of growth expectations, higher rates. Has anything specifically changed that you really want to shift your allocation and hold it in cash?
Well, I think we have to realize that we are late cycle, and there's going to be more late cycle activity. The Fed is pumping the brakes, and what that means is the rate-sensitive sectors are going to see some of that, give back, and that's what we're seeing. I think it's normal to see this type of activity towards the end of a cycle as the Fed starts its tightening cycle. So, they said don't fight the Fed for the past 10 years effectively. Don't fight the Fed still. They're tightening for a reason. That's going to have implications on markets.
One trend that we've seen, though, on these days, these mornings, when you're up like this by a nice amount, we've seen that initial pop, sold into the end of the day, and we end the day at the lows. Do you expect that today? When can that trend turn around?
Yeah, I hear the question. It's tough to call the day-to-day move, obviously, but I talk to people about a potential rally, a Santa rally or even a January rally, which is somewhat typical. People are looking to fade it. They're looking to sell into it. So I think that's going to be a trend we're going to see here. There's been a rotation that's occurred at the hedge funds where they've de-risked, they've brought down leverage, and now we're at a situation where they still have a little bit more to go, I think. They're still long tech, they're still long momentum, so they still have some unwinding of that trade to do. So if they're actually thinking the cycle's over or it's close to the end, that rotation is going to continue.
Yesterday we had all talks about Brexit. The week before was all about G20. If you take out the geopolitical events and you trade only on the market, what would the market be doing right now?
Well, that's tough. It's tough. All we do is connect the geopolitical events to the market. So to say what would happen if there weren't these, I think the market would be stronger. I think,
I guess my question is, are we headed for a recession? Are we headed for a slowdown? Will this market still be selling off even into a Christmas rally, which looks to be a great Christmas retail season?
Yeah.
But people wonder, is this the last hurrah? What's your view?
I think if we remove the geopolitical, we could see a rally here. I think we should see a rally here.
So you're not expecting a growth slowdown?
No. What I think is causing it is a confidence crisis right now. We've seen China trade actually slowing some supply chains, causing some drag on growth across the world. So that's happening. Now, if there is a true pause and we start seeing some constructive discussions between U.S. and China, we could see that actually, reverse course in the market.
In fact, we have a new round of trade talks that we're reporting this morning. Treasury Secretary Stephen Mnuchin, U.S. Trade Representative Robert Lighthizer holding a call last night with their Chinese counterparts, reportedly discussing agricultural purchases, changes to China's fundamental economic policies, according to the Wall Street Journal. And this comes amid heightened tensions over the arrest of Huawei CFO. She's still waiting to find out whether she will be released on bail. The decision could come today. So this is all intertwined. We did hear, as soon as he came back from Argentina, Dagan, that the president said China was going to buy all these agricultural products. Remember, $1.3 trillion was the number.
Because of the trade fight that we've gotten into with China. And it's a two-party fight. It's not a one-party fight. And it's really hurt farmers. Farmers have gotten a multi-billion-dollar bailout from the federal government to help them out. That will be good news. But I would caution that there needs to be one voice. While the U.S. goes through these trade talks, there needs to be one voice on this. And I would say it would be the President of the United States. I think investors have become accustomed to the way the President communicates. People can call it what they want, but that's who he is. Right. As Donald Trump, President of the United States, I think that this is a moment where a lot of these talking heads in the White House need to stay off television. And I said that yesterday about Peter Navarro. Yeah. But again, there needs to be one voice. And clearly there's been fighting within the White House over time between Lighthizer and Navarro and Mnuchin and maybe even Larry Kudlow. So just let the president talk about it. That's it.
Well, apparently they did have this call last night. Mm-hmm. Did that change opinions in your view on Wall Street in terms of where we are in this negotiation?
You know, I think it's positive to see that we're back at the table. Since July, really, the Chinese and the U.S. governments weren't really at the table at the senior level. It was barely even junior staffers having conversations. So it's positive to see that. I think we saw Trump and Xi go back home after the G20. While there wasn't a joint communication, they did go back home, and they both tried to spin it domestically. Hey, we got some things done. There was some progress. We took that as a positive cue. If you're to look at one silver lining from the G20, I think that's it. That they said, we have to get something done here. They're looking at the markets, both of them, their respective domestic markets.
You do think we're seeing this rally today because of this new talk last night, right?
Yeah, I definitely think that the rally we're seeing this morning
right now.
Of that.
We also have another push for tax reform, Ben. So what about that? I mean, House Ways and Means
I don't think that's what's driving markets today.
Okay, because Kevin Brady is retooling this tax cuts 2.0 right now. He's trying to secure more Republican votes. The bill delays several health care taxes. It allows expecting parents to create 529 plans for their unborn children. So you don't think that has an impact in any way, right?
No, I think the plan he released, I think it was the Wednesday after Thanksgiving or the week after Thanksgiving, was more bipartisan looking, and I think the revisions are more partisan, and so it seems pretty lame ducky, some politicking at this point to us.
And speaking of politics, I'll throw this in. I'm hearing this more and more from investors. They're really waiting for the Mueller report to come out, and they point to what the 2 months before the Ken Starr report came out in 1998, which was in September of that year. Granted, that was the collapse of long-term capital management at that time as well, so it's hard to separate the two. But in the 2 months between mid-July and the Starr report coming out in September, the S&P fell almost 20%, about more than 19%. Granted, the market made back all of that loss by the end of November, but this is, people are standing back and now waiting as more and more filings come out of the Mueller team, out of the U.S. Attorney for the Southern District of New York on Friday. That's becoming a focus as well. And Gary B. talked about it over the weekend.
Yeah, it's one of three really important things that will probably give us a sense of what's going to happen in 2020. Right. Number one, who did the Democrats put out there to go against President Trump? Number two, how's the economy doing? We'll see if we are in a growth slowdown come 2020. And number three, the Mueller report. What comes out of Mueller?
I want to add one more thing. I think the markets, and I know you'll agree with me, you're getting a little bit of a lift moving into the week because we didn't get an inversion of the yield curve between the 2-year and the 10-year, where, you know, if the shorter rates are higher, that indicates a recession it has for the last 50 years. We didn't get that last week, and I think that there was a bit of relief among investors that
because as it was coming close, the 2-year and the 10-year markets were selling off.
Right, as narrow as it was since 2007, but we didn't get that inversion.
And the reporting on the Fed potentially walking back, maybe taking more of a dovish tone, obviously played well into that.
Right. Do you buy into that? Fed's not going to raise as many as people think right now? Ray Dalio, by the way, told us they're not going to be able to do it 3 times next year.
I don't think so. I mean, I think we look at, if trade continues like this, that is a drag on growth. And even if it's just discussions, it is dragging growth, it's dragging confidence. So if we see this continue, I don't think the Fed's hiking.
Ben, it's good to have you on the show.
Thanks for having me.
Thank you so much. Ben Phillips joining us there.